Good morning, students. Good morning, class. I'm C. Ankit Sharma, again, your income tax faculty with our provision regarding capital gain income. In the last session, we have completed the provision of PGBP, that is profit and gains of business and profession. And today we will be discussing the provision regarding capital gain. So I believe that you all are working really hard and studying very well to achieve the goal of your life, and that is to becoming a CA. So again, a good morning, Sat Sri Akal, Namaskar, Suprabhat, Vadakkam, Subha Bakhair, Kasakai, Kemcho, etc., etc., etc. So, good morning. Wishes from Almas Sheikh, Ajay, Neelam, Muhammad, Santhige, Divya, Manohar, Parth, Neha, Swati, Sankaran, Swati Krishna, Ruturaj, Kiran, Kala Selvi, Akram Ansari, Divya Kumari, Yuvraj Joshi. Okay, so Divya Kumari is saying, 7 बजे हम 7वीं आसमा PR जाने की कोशिश में. Okay, well said, Miss Divya Kumari. So, without wasting any time, let's start the thought for the day and then we will move on to our provision. I've already uploaded the notes yesterday regarding the capital gain. Capital gain is a very, in my opinion, very beautiful chapter because it does not have a single question like provision, like salary hai, in which a single question, there is multiple provision can be applied. There can be multiple perquisite, there can be multiple allowances in a same question, compensation, etc. And also basic salary, advanced salary. In the same way, in a house property question, the whole chapter can be asked in a single question where we need to calculate the GAV might be, then annual value, then interest provision, etc. Same in case of PGBP. In case of PGBP, of course, it's a huge chapter. We all have seen that it's a huge chapter, and there can be question on individual topic base also, but there must be a question which include almost multiple provision where a trading and P&L account must be given in the question, and you have to allowed and disallowed multiple income. So there can be a single question in all these three heads, whether it's salary, house property, or PGBP, in which you have to apply multiple provisions. Capital gain also a huge chapter and also a very important. Whenever we say it's important, that also means it's difficult, quite, or it's when I'm saying something is difficult, that means it's important also. So capital gain also a important chapter having a multiple provision. But the good thing is that is in a single question, there cannot be multiple provision apply, just like salary, house property, or PGBP. There will be 3-4 provision can be applied, but if in a chapter of capital gains, assume there is 40 provision, so it cannot be possible that in a single question, at least 15 is going to apply. There will be 4 or 5 provision, maximum can be applicable in a single question. So that's a good thing about the capital gain. The format is so easy that it is the easiest format in comparison to salary, house property, and PGBP. Capital gain general means that is profit on sale of asset or loss on sale of asset. So how we calculate profit on sale of asset or loss on sale of asset in normal case? That means sale price minus purchase price. So this is basically the basic format of capital gain. You have to find the sale value, you have to deduct the purchase price, and whatever will be your answer, that may be a capital gain or capital loss. Of course, it's not that simple, but just like format point of view, it's a easiest topic out of house property, salary, and PGBP. So before starting the topic, let's see the thought for the day. And so true this is, it says, we do not need to tell everyone that is capital gain. So as I told you that in case of capital gain, there will be profit on sale of asset or loss on sale of asset. Fine. So the basic charging section 45, that denotes the capital gain chargeability. As section 15 says about the salary charging section, as section 22 is house property charging section, as section 28 is PGBP charging section. In the same way, the capital gain charging section is section 45, and which says if there is a capital asset like house, sculptures like statues, paintings, jewelry, etc. Fine. So if there is a capital asset and if there is a transfer of capital asset, that means sold, exchange, etc. So if these two condition has been asset and there must be a transfer of that capital asset, then it will result into capital gain or capital loss. So we have to understand the meaning of capital asset in detail, that what is the meaning of capital asset and the definition of transfer. So after understanding the provision of capital asset and transfer, we will move on to the numerical treatment of these capital gain chapter. But before that, we have to understand first the meaning of a capital asset and transfer, because if there is a capital asset and it has been transferred in previous year, then only capital gain provision will apply. So if these both condition does not fulfill, then capital gain topic will not apply. What is the meaning of capital asset and what is the meaning of transfer? We are going to discuss. One more quotation: work hard in silence, let success make the noise. Of course, so true. So income under the head capital gains assessment year 24-25. This is part 1. So I have provided you notes for PGBP in 4 parts. So capital gain having 2 parts, part 1 and the part 2. Part 2 comprises generally the exemption provision and the tax applicability on capital gain scenario. So part 1 is all other provision is considered or comprised in the part 1, that is charging section 45. It says any profit or gain arising from, of course, transfer of a capital asset is chargeable to tax under the head capital gain in the year in which transfer took place. Now, the definition of capital asset is over here. It says according to section 214. Section 214 explains the meaning of a capital asset. According to section 214, a capital asset means property of any kind held by assessee, whether or not connected with his business or profession. So if you are having a property, whether it's for your personal purpose or property in your business, if they are property, that means asset, they will be treated as a capital asset. Any security held by the foreign institutional investor which has invested in such security in accordance with the SEBI regulation, or any unit-linked insurance policy, that is ULIP plan, issued on or after 1st February 2021, to which exemption under section 1010D does not apply, on account of premium payable exceeding 2,50,000 for any of the previous year during the term of such policy. So the definition of section 214, the definition of capital asset is very inclusive. It says all property held by assessee for business or other is an asset. Any security held by FII is an asset. Any ULIP linked insurance policy on which section 1010D exemption does not apply is also a capital asset, but does not include. So generally we can say that any asset is a capital asset. Any asset is a capital asset except these 5 points what we are going to study. These 5 things will not be considered as a capital asset for the purpose of capital gain, but does not include following. What is? Any stock in trade. So asset of a business is an capital asset, but stock in trade would not be form part of a capital asset of a business. Why? Because if we transfer stock in trade, that will constitute sale in our trading and profit and loss account. And that is going to be treated under PGBP head. So that's why, because stock in trade has been taxable as PGBP income, it cannot be treated as a capital asset also. So it cannot be taxed twice. So whatever is your stock in trade, that cannot be your capital asset. For example, there is a builder. The builder has having 50 apartments as stock in trade. So those apartment will not be considered as his capital asset. But one apartment is being used by the builder as his office. Out of that 50, suppose one is used by him as an office. That means it is his office building. That means it is an asset. So 50, 40 will be stock in trade, and that one only can be treated as a capital asset. For example, for me, my house or my flat will be a capital asset. But for a builder, the flat he has owned as a stock in trade cannot be treated as a capital asset. Very simple, okay? Next, point number 2 is very interesting. It says personal effects. So whatever is your personal effect will not be treated as your capital asset. What is the meaning of personal effect? So it says anything which is movable and is for your personal purpose. That means anything which is movable, and if it is your personal purpose, that cannot be treated as your capital asset. So personal effect means there must be two conditions should be fulfilled to becoming a personal effect. That is, first it should be a movable property, plus it should be for your personal use. Now, for example, a car for my personal use is not a capital asset. But a car used in business, that is a movable, but it is not now personal, it's for commercial use. That is going to be a capital asset. So whatever cloth we are wearing, the television, furniture, refrigerator, etc., whatever we are using at house, at our residence, that cannot be capital assets. So if we are selling our television, furniture, which we are using at house or at our residential premises, if you are selling that, in that scenario, there cannot be any capital gain, because in that situation, that will be your personal effect. So all personal effect, that means those assets which are movable and for personal use, will not be treated as capital asset. You might think that income tax is so generous that if I am going to sell my car, which is for personal purpose, so there will be no capital gain. You might be thinking, wow, it's a very good provision from the point of view of assessee, but wait, it's not like that. Income tax is very smart. In all movable properties, in all movable asset which are for personal use, there cannot be any capital gain. There will always, in every case, almost, there will be capital loss. Suppose I bought a car for 10 lakh rupees 2 years back for my personal purpose. And if I'm selling it now, so will I get more than 10 lakh or less than 10 lakh? Obvious, I'm going to have less than 10 lakh rupees as a consideration. That might be 7 lakh and cost was 10 lakh. So there will be loss always. If I'm going to sell my TV, furniture, etc., air condition, which I am using at residence, there will be always loss. So income tax intentionally remove the definition of personal effects from the definition of capital asset, because income tax knows that there will always be loss in these cases. And assessee will do what? They will set off this loss from income. So if there will be any income under capital gain, that is going to be set off by these kind of losses, because in this circumstances, in case of personal effects, movable things, there will always be loss. So whenever you think that income tax made a good provision for you, that wow, we do not need to pay any tax on sale of our personal effects. So let me tell you, there will not be any gain ever. There will be always, in almost every condition, loss. That's why in personal effect they said movable asset, not immovable. Because if you are trying to sell your house, which is immovable personal asset, there will be gain always, because if you bought a house for 10 lakh rupees 5 years back and now you're going to sell it, you're going to have more money. So that will be profit. So that's why smartly income tax says only movable and personal, because they know if you have an immovable property, that is going to result in a gain, and they are going to charge gain on that because that is outside the definition of personal asset. And there are some movable asset also, like jewelry, which is personal and movable. But still, at the time of sale, there will be gain, not loss. So, income tax said in point number 2 that we will not consider personal effects as a capital asset, like clothes, furniture for personal use, but excluding. But there are 6 personal assets. Those are mobile as well as personal use. We will treat these as a capital asset. And these, why they are going to consider these as a capital asset, because these are those personal mobile assets on which at the time of transfer there will be gain, like jewelry. If you sell jewelry, you will have more money in comparison to that amount which you actually used at the time of purchase. Archaeological collection, drawings, paintings, sculptures, or any work of art. So, except jewelry, these 5 technically antique things. So, antique things always sold on a higher price from the price at which you have purchased it, like the painting of Mona Lisa, etc. Any old coins, any old statues, etc. So, you are going to have receive more money in case of antiques. So, if you have any painting, if you have any drawing, sculpture, any work of art at your home and you are using it for your personal purpose, so at the time of sale, income tax, no, there will be gain. So these 6 will be considered as capital asset. Except these 6, all other movable and personal will outside the definition of capital asset. So I have also written over here, these are personal asset, still will be treated as capital asset for the purpose of capital gain. So you might get it that how smart is income tax department. Okay. So any stock in trade will not be treated as capital asset, any personal effect except these 6, any agricultural land situated in rural area. So if you have any agricultural land which is situated in rural area, that is also outside the definition of capital asset. If you have having an agricultural land but situated in urban area, that is going to be your capital asset. 6.5% gold bond, 7% gold bond, national gold bond, special bearer bond. Again, these are the bonds issued by government and these will not be treated as a capital asset. Gold deposit bond issued under Gold Deposit Scheme 1999, Gold Monetization Scheme 2015-18 notified by the government. So these bonds also outside the definition of capital asset. So these 5 things are not going to be treated as capital asset. Except these 5 things, almost each and every asset is going to be treated as your capital asset. I hope it's clear. So the concept of capital gain, as I told you, the capital gain in general terms is the profit on sale of asset or loss on sale of asset. So you can see in the 2 different picture, purchase price if less than sale price. If your purchase price is less than your sale price, that will result in capital gain. And if your purchase price is more than sale price, then it will result in a capital loss. In the normal situation, we call this situation as profit on sale of asset, and this we call loss on sale of asset. Clear? So it's a very simple terms and very easy to understand. Next is the format. As I've told you, the easiest format in every chapter in comparison to any chapter what we have gone through, like salary, PGBP, and house property. The easiest format is under capital gain. What it needs, it just needs your sale consideration, whether we receive monetary or non-monetary. That will be given in question. The consideration will be given in question. Less expense on transfer. If anything has been expended at the time of transfer, like commission, brokerage, etc., that is going to be deducted from sale consideration. So we will have our net sale consideration. That is net amount we have received at the time of sale of our capital asset. Then we have to deduct the purchase price. The purchase is termed as cost of acquisition. If you try to understand the meaning of this word, that is technically purchase price. Cost of acquisition, that means the price at which we acquired that property. That is cost of acquisition. Or we have to take index cost of acquisition. This is a new word, and you might be hearing this word first time in your entire life. What is index cost of acquisition? So cost of acquisition is simple. The new word is index. So what is the meaning of index? That I will explain later. Okay. Then cost of improvement. What is cost of improvement? Suppose I have purchased an asset for 10 lakh rupees 10 years before. So that is my cost of acquisition. Okay. And there might be some expenditure I have incurred on that asset after purchase, but before the sale, like on its maintenance or any construction I have done upon it or any replacement, etc. So if any expenditure has been done after purchase of any property, that is called cost of improvement or index cost of improvement. So again, the meaning of index will be discussed later. So this is technically our sale consideration. Sale consideration minus expense, that means my net sale consideration. Now this is my purchase price. This is any capital expenditure after purchases that is going to be deducted. After that, I will have my capital gain or loss. Now the capital gain or loss might be two types, long term or short term. What is long term? What is short term? That again I am going to discuss later after the definition of transfer. So the result will be long term capital gain or short term capital gain, or long term capital loss or short term capital loss. So you can see the definition, the format of the solution is so simple, very, very simple. And the amazing part, everything will be given in the question. Like sale consideration, that will be in question. The cost, that will be in question. Expense on transfer, if any, that will be in question. Cost of improvement, that will be in question. So maximum information must be in capital gain question itself. The very interesting point regarding a capital gain question is this, that the question might be having 10 lines. That Mr. A has purchased this property. So you might going to see a question having 10 lines, and the solution is just like in 4 or 5 rows. The solution will be in like 4 or 5 rows maximum. Sale consideration, purchase, etc. So question will be huge and the answer will be very tiny, very, very small, very simple if you know the provision. So we have discussed the capital asset meaning, the section 45, the format, and now we are moving on to the definition of transfer, because for the purpose of applicability of capital gain, there must be a capital asset and there must be a transfer under section 247. In this transfer scenario, there are two same points what we have discussed under the definition of deemed owner under income under the head house property. So in the definition of income under the head house property, there were 2 points and I have discussed that point. And at the time of discussion, I told you that these 2 points will be again in the capital gain chapter in the transfer definition. And when it will come under capital gain transfer definition, then I am not going to explain that point again in detail. We will just discuss it in normally. But the detail of that point have been discussed in the case of deemed owner definition. So any of you did not attend the class of income from house property, kindly go and watch the first lecture of income from house property. There is section 27 deemed owner explanation, in which we have discussed these points, which is point number 5 and 6 in the definition of transfer. What we are going to discuss right now, the point number 5 and 6 in detail we have discussed in income from house property. Okay. So if anyone having any confusion in point number 5 and 6, what we are going to explain in short over here, they can go and watch the definition of deemed owner under income from house property. Transfer for the purpose of capital gain includes. Now the transfer definition is very huge. It just does not include the term sale only. It includes a lot of terms. So transfer is a very wide term. Technically, we can say if your ownership has been transferred, if your ownership has been transferred to someone else, whether it's for consideration or not, whether the consideration is monetary or not. So if the ownership has been transferred to someone else, that is generally called transfer. Generally, okay. So transfer for the purpose of capital gain includes following. First, it's saying sale. Sale is a transfer, of course. So if you are having an asset and you transfer your asset taking the consideration in monetary term, that is called sale. Exchange is also a transfer. So if you transfer the ownership of your asset and in exchange we take some other asset like barter system, that was also a transfer. So whatever asset you took from the other person, the FMV of that asset, what you take against your asset, will be called the sale consideration. For example, if I am having a jewelry and I transfer this jewelry to someone against shares. So someone transfers share to me and I transfer my jewelry. So the fair market value of shares will be treated as sale consideration for the purpose of capital gain. Now the relinquishment grammar meaning or dictionary meaning is to waive the right on any asset voluntarily. That means to transfer your asset to someone else without any kind of consideration. Not in monetary, not in non-monetary, without consideration transferring of ownership of your asset. That is generally called gift. In a simple language, we called it gift. So if I am going to transfer my capital asset to someone else as a gift, that is also a transfer. But in case of gift, sale consideration will be always nil because gift do not have any monetary value. So you can see if we find in the case of first point, if there is sale, the monetary value will be sale consideration for the purpose of solution of a numerical. If it's an exchange barter system, whatever we are receiving, the FMV of that thing will be my sale consideration for the purpose of solution. But in case of relinquishment, the sale consideration will always be nil. So generally, the meaning of relinquishment is to waive right on any asset voluntarily, like gift, will, donation, etc. They will all form part of relinquishment, and asset is now owned by someone else. So that is my definition of relinquishment, that you transfer your right to someone else and now the asset has been owned by some other person. But for the purpose of section 247, in a grammar meaning, the meaning of relinquishment was only this: waive right on any asset. But under income tax, for the purpose of capital gain, destruction of asset will also treated as relinquishment of asset. Destruction of asset. That means if the asset has been destroyed by fire, etc., that is also going to be treated as sale. That means also going to be treated as transfer. So if in the question it says that was an asset which is caught by fire and it has been destroyed or destroyed by accident, etc. So do we need to calculate the capital gain? We have to say yes, because there was an asset and destruction is treated as a definition of transfer inclusion under relinquishment word. So we have to calculate the capital gain in that case also. Let me explain with the help of some example. So we are discussing the definition of transfer. And I told you the format of capital gain says there will be sale consideration, expense on transfer. After that, we will have our net sale consideration. So in different situation, what is going to be my sale consideration? So transfer first point having 4 different conditions. It says either it will be a sale. So if it will be a sale, then the sale consideration will be the monetary value, which will be given in question. Okay. If it is an exchange, then the fair market value of the asset or thing we receive, asset or service we receive, the fair market value of that receiving asset will be my sale consideration that will be given in question. In case of relinquishment, so relinquishment cover technically 2 situations. One is gift, will, donation, etc. Other is destruction of asset. Destruction of asset. So in case of gift, will, etc., sale consideration will always be nil. Clear? In case of destruction of asset, there will be 2 situations. Either the asset will be insured by you, that asset having insurance, either it will be insured or non-insured. So if it is insured, then the sale consideration will be insurance compensation. If it is not insured, no need to calculate capital gain, not applicable, irrelevant. Now in case of gift also, consideration will always nil and there will be cost at which price you have purchased that asset. So in case of gift also, there will be always loss, always loss. There cannot be profit, always loss. So income tax is very smart. They know that in case of gift, there will be always loss and loss can be set off against profit. So income tax will reduce. So they exempt all gifts under section 47. So we will discuss section 47 later, in which you will see. So please remember, gift is transfer. If question asks whether gifts covered under the definition of transfer, the answer is yes. But at this point of time, you might be happy that we have a loss at the time of gift, so we can set it off against my income. But later when we will discuss section 47, it will say gift will be exempted and there will be no loss if you are transferring any asset as relinquishment. So in case of gift, there will be loss, there is transfer, but that is not going to be treated because it is exempted in section 47. I hope it's clear what we have discussed till now. So sale, exchange, relinquishment, etc. Those are transfer, extinguishment of any right on any asset. So relinquishment means waiver of right or destruction, but extinguishment means if the ownership has been confiscated from the owner by law. If the ownership has been confiscated by law from the assessee, that is also going to be treated as transfer. Like you have purchased a car for your commercial purpose, for your business on loan from a bank. After some time, you are not able to pay the installments. So what will the bank do? Bank will come and confiscate that car and the ownership of that car from you. So that is also going to be treated under the definition of transfer, and that will be called extinguishment of any right on any asset. Extinguishment of any right, that means ownership, that means destruction of right or confiscation of right. So that is also going to be treated as capital asset gain in section 247. The next is compulsory acquisition under any law. What is the meaning of this? We have a specific and detailed provision regarding this under section 45(5). So compulsory acquisition under any law, we are going to discuss when we will discuss section 45(5) in detail. What is the meaning, what is the implication, etc. Again, conversion of capital asset into stock in trade, we have a specific section for this also, section 45(2). Detailed provision, including the meaning, implication, will be discussed under section 45(2). So these point number 3 and 4, I am not going to discuss here in detail. Now, point number 5 and 6 are those points I was telling you that these are the part of income from house property also. I have explained these points under income from house property with example under section 27 in the definition of deemed owner. So here is the shortest provision with example regarding those. It says transaction involving possession of immovable property, only applicable in case of immovable property. So transaction involving possession of immovable property in part performance of a contract referred to in under section 53(a) of Transfer of Property Act. So if there is any building which has been, the possession has been transferred to the buyer of that building without being registered, without being ownership transfer. If the possession has been handed over to some other person without being registered agreement, without being ownership transfer, that will be considered as transfer for the purpose of capital gain under section 247. Example explain everything. A enters into an agreement for the sale of his house. So they just made an agreement, but not the registered deed. The registry has not been done. The purchaser gives the entire sale consideration to A. A hands over complete rights of possession only, not the ownership, to the purchaser since he has realized the entire sale consideration. Under income tax, the above transaction is considered as transfer. Even legal title registry did not transfer yet. So if the buyer takes the possession, the receiver takes the consideration, in that scenario, that will be treated as transfer under Income Tax Act. Again, point number same also we have explained in house property. Any transaction by way of becoming a member, acquiring share in a company, society, etc., which is the effect of enjoyment of any immovable property. So a person may become a member of a society, company, or other association of person which may be building house flats. When he pays an agreed amount, the society, etc., hands over possession of the house to the person concerned. No conveyance transfer is registered for the purpose of income tax. Above transaction also be treated as a transfer. So if any one of you, I have told you earlier, any confusion in point number 5 and 6, kindly go and watch income from house property, section 27 class. Okay. Now I have told you that asset will be differentiated in two types. There will be long-term capital asset or short-term capital asset. So if we transfer a long-term capital asset, then the answer will be long-term capital gain or short-term capital gain, or long-term capital loss. And if we transfer short-term capital asset, then the result will be either short-term capital gain or short-term capital loss. So when an asset will be treated as long-term or short-term, these provisions going to explain it. Let me take some queries before the starting of this long-term, short-term scenario case. Okay, good morning, good morning, good morning. Mr. Srinivasan Venkatraman is asking, hi sir, good morning. PGBP question number 9. Test your knowledge. Please clarify depreciation calculation. I guess I have calculated that in last class, but okay, I will explain you. No problem. Okay, good morning. Neha is asking, how was your health, sir? Now feeling very better, very in a better condition. My throat is very fine now. Next is good morning. How, sir, how to revise PGBP? It's so vast. Kiran Shukla, Miss Kiran Shukla. For revision, you have to make a time schedule. You should take at least 1 hour every day to revise income tax at least, because the income tax has a very beautiful characteristics that if you avoid this subject for 1 month, if you complete this subject and if you think that I will take again start revision after 1 month, then at the time of revision you will find it's a new chapter, it's a new subject completely. So you have to revise regularly, make short notes, or for the purpose of revision I am providing you the chart presentation, of course, so you can go through the chart regularly, so it will update the provision, or you are not going to forget the provision completely. That's the only way. You have to revise the provision regularly. So, Hail Sheikh, sir, your teaching style is amazing, but little bit summary explain in Hindi. If I'll explain in Hindi, they'll be very difficult because we have short of time. And if I'll start explaining Hindi, I need more lecture. We have to complete capital gain in 5 lectures, a huge topic again, like PGBP. And you might feel at some time that I'm going very fast. It's just because we have to cover each and every provision. So I try to cover that. I have to explain each and every provision of the study material to all of you. So that's why whenever I feel that there's some provision where those are very simple and theoretical, so I try to be little fast. But if I'll start explaining Hindi also, so I at least need 8 or 9 lecture for capital gains. So I can read the lecture in the provision in English as well as Hindi. So for now, that is not possible. That's why I'm trying to explain the provision in a very simple English language, very simple, not using very technical word, not using very difficult language of English. So I'm just trying to keep it very simple, very layman, that anyone can you understand what we are teaching or going through the provision. Next is Ria is asking, how are you? I am fine, Ria. Thank you. Next is Prashant Gautam. Sir, who will taught GST part? Does it have any class or note? Please kindly check the schedule which has been uploaded by the Board of Study, Prashant. You will find, of course. My audio is not mute. Manish, is there any voice problem, Manish? The student was saying that there was no audio. The student were actually sending no messages, sir. Audio is not. Okay. I guess voice must be there now audible because there will be some technical glitch at a time, but I guess now the voice must be clear. So आपकी voice नहीं आ रही, audio problem up to sorted. Okay. Capital asset means an asset which is not stock in trade or inventory. Miss Swati Krishna asking, capital asset means every asset is a capital asset. Okay. But there is certain which asset which will not be considered as a capital asset. So stock in trade is excluded from the definition of capital asset. That's why it cannot be treated as a capital asset. Next is Mr. Rahul Sharma is asking, good morning, sir. Deferred revenue expenditure can be a capital asset? No, Mr. Rahul, it cannot be a capital asset. No. Technically, there is no concept of deferred revenue expenditure under income tax. That is the concept of accounting. So we do not have any definition of deferred revenue expenditure under income tax. Okay. Next is Swati Krishna asking, sir, capital asset plus personal effect, if transferred, there is always loss. But gold, painting, jewelers, artwork are generally sold more than the cost, and that is included in the capital gain. That is why income tax is smart. Of course, they just did it intentionally. That these capital assets, these personal assets, going to have always result in gain. So they need to charge it. So they exclude these from the definition of personal effects. Okay, Mrs. Nancy Saxena is asking, sir, of we are using, it must be, if we are using car for both personal and professional use, then we have to see the bill, the invoice. Actually, the practical utilization we cannot track. The income tax cannot see that either you are going to buy the grocery by a car, or either you're going to attend a marriage by a car, or you are using it for your office purpose. How income tax will find out? So it depends upon the invoice. If the invoice has been generated at a time of purchase in your personal name, that will be treated as your personal car. If it has been purchased in the commercial name, in your business name, and payment has been made by the business account, then it will be treated as for business purpose. Okay. Practical utilization cannot be tracked. Next is Pooja is asking, sir, if we sell Preach TV and if there is any loss, then it can be set off? No, because it is not capital asset. It has been removed from the definition of capital asset. So these losses cannot be claimed anywhere. We call them dead loss. Dead loss. Okay. Next is, sir, Sushil is asking, stock and stock in trade are same. Yes, stock and stock in trade are the same thing. Okay, they are exactly same. There's no difference between stock and stock in trade. Price index, I will explain what is the meaning of price index. Indexation concept is yet to discuss. Mr. Shivanna asking, sir, what if the depreciation calculated in earlier year? You can only claim the depreciation if there is a asset which is used for commercial purpose. You cannot claim depreciation on your personal asset. Okay. So if that is a depreciable asset, the treatment of capital gain we have separate provision for it under section 50. We will discuss the provision of depreciable asset. Good morning, Santosh. Okay. Sir, what to do in examination? Nothing to do. Just work hard right now, and at that examination time you will be prepared and you will know what to do at that time. Okay. Next is destruction means destroy. Yes, asset caught by fire or accidental, etc. That is destruction meaning. Next is Prince. For purpose of gift, here gift means gift is provided in the Contract Act and those condition needs to be satisfied for the purpose of capital gain. Gift means any condition in which there is no consideration. They all are covered in the definition of relinquishment. Income tax do not have definition of gift under section 247. We have a definition of relinquishment which says whenever you transfer your asset voluntarily, अपनी मर्जी से, खुद से, to anyone, without consideration, that is relinquishment. Gift, will, donation was the example I explained to you. Next is, can asset cost reduce on insurance claim amount? Yes, of course, that will be the format. Whatever you will get the insurance compensation, that will be your sale consideration. I was explaining in the definition of transfer, what will be sale consideration. The respective cost of that asset is going to be deducted in all the cases. So I was explaining what will be the sale consideration in case of sale, barter, that means exchange, relinquishment, destruction, etc. Prince is saying, my question in simple term, it's can gift be given to anybody? Yes, you can gift anything to anyone, whether your friend, enemy, relative, stranger, etc. Okay. ट्रांसफर पॉइंट नंबर 2 एक बार और मोहम्मद सुहेल, दैट इज एक्सटिंग्विशमेंट. एक्सटिंग्विशमेंट का मतलब होता है किसी चीज पर से आपका राइट जबरदस्ती छीन लेना, ओनरशिप, उसे एक्सटिंग्विशमेंट कहते हैं. जैसे मैंने एग्जांपल दिया कि आपका एक घर है मान लीजिए और लोन पे लिया, आपका नहीं किसी और का घर है जो किसी ने बैंक से लोन पे लिया और लोन नहीं चुका पाए, तो बैंक क्या करेगी, उस घर को ऑक्शन कर देगी आपसे छीन कर. तो वो जो बैंक आपसे घर लेगी, कॉन्फिस्केट कर लेगी आपकी ओनरशिप, उसे क्या कहेंगे? एक्सटिंग्विशमेंट। ओके, नेक्स्ट इज मिस साइपा विरल। नेक्स्ट इज, if we did not understand PGBP and income from house property, can we understand this chapter? Yes, of course you can. Only section 50, which is regarding the depreciable asset, that might going to affect you. All other provisions are separate. They do not have any connection with PGBP or house property, but it's my advice that before starting to read any chapter, you have the knowledge of basic principle of income tax, residential status, PGBP, salary, house property. That's a system of learning everything. So that process should be followed. Vipul Tiwari is saying, I am a new student. Most welcome, Mr. Vipul. Vipul, you are awesome. Thank you so much. Okay. Prabir Datta is asking, how will a pet question? Don't worry, we will discuss the illustration, of course, and the questions, the example, and the test your knowledge question. You will get what kind of format will be there for questions. So just focus what we are discussing right now. We are discussing the definition of transfer. We have discussed the definition of capital asset. So you should ask your question only relevant to the topic what we have discussed. What we have not discussed, that how we will prepare capital gain provision, what we will do in examination, how the question will be framed. Do not worry. The time will come, then one by one we will discuss each and everything. Okay, so just be patient and just stay with me. I will explain everything. Next is Tushar is asking, note is enough. Notes is exactly based upon the study material. You can go through the notes or as well study material. You will find both are equal and same. So does livestock come under capital asset? No, they do not come under the definition of capital asset. Living things do not come under the definition of capital asset yet. Okay. Rahul is asking my query regarding PGBP section 44AB. In case of normal business, turnover limit is 5 crore or 1 crore as per the new amendment, and cash receipt is 5% is or T or a total receipt. The turnover limit is 1 CR and 10 CR, not 5 CR, it's 10 CR. So we were discussing the latest provision. It is 1 CR and 10 CR. Okay, kindly refer the notes correctly, and it is 5% of receipt and payment also. Okay, Nagaraj is asked, Nagaraju is asking, sir, agricultural land also not included in capital asset. Agricultural land is not capital asset if it is in rural area. So if it is an urban area, then it is going to be your capital asset. Okay. Now this kind of question, how many question papers solved before the exam? These kind of questions should be avoided. I requested you that waste our time. Mine also, your also, and also a lot of students. Those are here to actually understand the provision and the queries which is related to the topic only. Miss Chetapalli Harshita is asking, sir, if we purchase a car for office purpose, but registration is not done yet, we cannot buy a car without registration. What kind of question you ask? And even we are not concerned with the registration. You should have an invoice. You cannot purchase anything without invoice. Na? So the invoice we are talking about is the invoice in the name of business, and the payment has been made by the business account. That will be used for commercial purpose. Assumption in practical life. Okay. Next is again paper pattern. What are you asking? Ayush, these kind of question, please do not ask. Kindly ask these kind of question to the board of study. You should mail them to ask the pattern, etc. We are here to discuss the provision of capital gain. Okay. Next is Mr. Malipathy Chinmay. When Kata Sai is asking, is registration expense at the time of sale of land is an expense on transfer? Registration expenses at the time of purchase, if any asset, if any land has been purchased by me in 2010, At the time, whatever registration charges have been paid by me will be the part of my cost. But yes, if any registration charges has been paid at the time of transfer by the buyer, then it's going to be expense on transfer and will be reduced from sale consideration. Very correct. Next is Dhruv Khattar, sir, you are talking about gift. Is it not taxable under? We are discussing from the point of view of the donor till now. You asked me about the can we gift any asset to anyone? Yes, you can gift the asset to anyone, whether relative, friend, etc. So we are not discussing the provision from the point of view of the receiver. We are discussing the capital gain provision from the person who transfer the asset. So I am Mr. A, you are Mr. B. I can transfer my any asset to Mr. B, whether he is my friend, relative, etc. So that is the treatment under the capital gain in my hand. The receiver treatment is income from other source under section 56. So we are not discussing the treatment in the hands of the receiver. We are discussing the treatment in the hands of the transferor, not the transferee. Transferee provision will be discussed under income from other source. Have patience. That will also come. Next is, okay, sir, if loss by fire and compensation received by insurance company, does it fall under capital gain? Yes, exactly. That is going to be treated as relinquishment, destruction. That compensation will be your sale consideration. Transfer of our own building to charitable trust free of cost. If you are transferring anything free of cost, that is not chargeable to tax in my hand from the point of view of transferor. Okay. Praneet Kumar is asking, agricultural land on which no agricultural activity done is a capital asset. Yes, agricultural land will be termed as agricultural land only when it has been used for agricultural purpose. Mr. Prince, sir, if by any chance, if we get some profit by selling some asset, not a capital asset, will the profit be treated as income from other source? It might be. It will not be capital gain, that is for sure. But what it will be, it depends upon your question. What exactly you are transferring, that will tell is it going to be taxable or not under income from other source or not. Okay. Next is, if any museum acquire any artifact and keep it for public display and charging money for it from the public, does it come under the head PGBP or capital SIP? Depends upon the constitution of that museum, whether it's a private, public, or under which act it has been constituted. So if it is a private museum, like I have made a private museum and in charging money, that might be a business income. It should be a business income. Then in section 43B, in payment based allowed expenditures, sir, in this case, list fees include fees. That fees does not include advocate fees or CA fees. That is fees under any law. It has been written that is fees under any law. So that fees is for government fees. If any fees we need to pay to the government, like registration fees, etc. It does not include chartered accountant fees or advocate fees or any other fees, because these fees are under the contract of me and my client. It is not under the contract of law. Keshav is asking, sir, if a property is sold by me and said property was ancestral, in this case, capital gain calculation will apply. Yes, that will be applicable. How it's going to be applicable, that we will discuss in numerical topic of capital gain. Miss Vaishali is asking, sir, if asset destroyed by fire or accident but not insured, then in that case, there is no capital gain requirement. There is not definition of transfer. You need not to calculate any capital gain. I have written that is not applicable. If there is no insurance, there is non-applicability of these provisions. So I have taken all the queries. Let's discuss the term long-term capital asset and short-term capital asset. In case of there's some months requirement according to which we decide whether it's a long term or short term. For some asset, they are treated as long term after 36 months. Some asset will be treated as long term capital asset after 24 months. and some asset will be treated as long-term asset after 12 months of use. So if they are less than or equal to 36, in this case, they will be short term. In this case, short term. In this case, short term. So there is some asset, those will be treated as long term after 36 months, as long term after 24 months, as long term after 12 months. So what are these assets? First of all, for these, in this case, first one is listed security. That means listed security will be treated as long term capital asset after 12 months. So if I am having a listed security and if I am selling it after 14 months, 14 1 4, it will be a long term capital asset. So if I am transferring it before for 12 months, that means after 11 months, that will be short term capital asset. So in the definition of listed security, equity and preferential listed include debenture, units of UTI, zero coupon bond. So if we transfer any of these assets after 12 months, these will be treated as long term. Before 12 months, these will be short term. Up to 12 months, also will be considered as short term. Okay. In case of immovable property like land and building, and unlisted shares, the limit is 24 months. So buildings, that means land and buildings, immovable property, and unlisted share, they will be treated as long term if transferred after 12 months. If up to 12 months that has been transferred, they will be treated as short term. So if I have purchased a land and I have transferred it after 23 months, that will be short term capital asset. All other asset except A and B, all other except A and B will be under this category. They will be treated as long-term capital asset only if transferred after 36 months, including units of debt-oriented fund, unlisted security other than shares, and other asset like gold, drawings, painting, unlisted debenture, etc. They will be treated long-term after 36 months. Point number B will be treated as long term after 24, and these listed security will be long term after 12 months. One amendment and note has been there regarding and specified two asset. Capital gain arising from transfer of market linked debentures and units of specified mutual funds. They will always be treated as short term. Always. There is no requirement to find the time duration on these two assets. For other asset, we have to apply the time 12, 24 or 36 as the case. But for market linked debenture or units of specified mutual fund, government specifically treated them as short term capital asset. The time duration is irrespective of the period of holding. So if these assets have been given in question and it's said that they have been sold after 40 months, even if we will treat them as a short-term capital asset, specifically included in the definition of SPCA, short-term capital asset. I hope it's clear for the meaning of short-term capital asset and long-term capital asset. So what is short term? Those are not long term, will be treated as short term capital asset. So there was a term which was index. So now the indexation concept is going to be discussed. And this is the first important, or we can say numerical oriented topic of capital gain chapter. Indexation. What is the meaning of indexation? Let me explain you in a very simple language. So that's why I have made a very simple example for you also that will make you understand the concept of indexation. Then we see the implication. So first of all, I need to make you understand the concept of indexation. What is the basic purpose or basic means of indexation? So generally, suppose there is Mr. A who purchased the property, suppose any building, for 20 lakh rupees in 2005. Clear? Now he is selling this property, he is transferring this property in previous year and the sale value or the sale consideration is suppose 100 lakh. So if in a normal case, we are going to calculate the capital gain, so that will be sale consideration minus cost of acquisition. If there is no indexation concept, then we need to deduct the cost. That means what is the profit on sale of this property? That will be 80 lakh rupees. The capital gain tax rate in general is 20% on long-term capital gain because it has been purchased in 2005 and sold in 2023. For the purpose of building, 24 months requirement is applicable. It's more than 24 months, so it's a long-term capital asset. So gain will be long-term capital gain. So on 80 lakh, approximate tax will be 16 lakh. Approximate, okay? Education says surcharge, etc. will be extra. So he might need to pay tax at least 16 lakh rupees on transferring of this property in 2023-24, which he has been purchased in 2005 for rupees 20 lakh. Now the problem is this. This problem only arises in case of capital gain chapter. This is not applicable in case of PGBP, not in case of house property, not in case of generally salary topic. What is the problem? The problem is this Mr. A says that this is injustice. What is injustice? It says you are taking the currency value. You are taking the currency value for my sale consideration for the year 2023 and 24. The currency value for my sale consideration, you are taking 100 lakh is the currency value of my sale consideration, which belongs to 23-24, and the currency value for my purchase price you are taking for year 2005. So there is variation. These 5 lakh, these 20 lakh, what I have incurred in 2005 currency value, will it be same in 2023-24 or higher? What we purchased for rupees 20 lakh in 2005, can we purchase the same property in 2023-24 with the same currency of 20 lakh rupees? The answer is no. If we could purchase something in rupees 100 5 years ago, then can we exactly purchase the same commodity today also for 100 rupees? No. We need to expense more money for that. And why it's happening? Because of inflation. Because of inflation, it's happening because the purchasing power of money is reducing. So the assessee was saying that it is wrong, that my sale consideration currency value you are taking for current year, but my purchase price currency value you are not taking for 2023-24, you are taking it for 2005. So why these two amount having the different currency value? This is not in PGBP case because all the sale purchase is having for the same year. This is not in the case of salary, not in the case of house property. But it is only happening in the case of capital gain, because always in case of capital gain, we will have the currency value of current year in case of sale. And for the purchase year, we will have the currency value of some long ago year, some old year. So that is not justified, because in that case, he has to pay higher tax. Because this 20 lakh, the value was for equivalent to 2005 20 lakh, not 2023 24 20 lakh. So assessee says you need to calculate this 20 lakh value with the inflation effect in 2023. That should be done. And government agreed it. Yes, he was saying right. So we need to convert this 20 lakh value of 2005 currency into 2023-24 value with indexation. That is, due to the inflation, the value has been increased. That has to be converted with the help of indexation. So that is called indexation. Indexation means just a simple word, converting the currency value of the purchased year money incurred in comparison to current year value of that currency in the year in which asset has been transferred. So for that, index has been made. There has been a complete list of index which has been made by government from year 2001 to. They have explained that if 100 rupees has been expended or incurred in year 2001-2, then the next year 2-3 it will increase to some value. In 2003-4 that will be higher, and so on. In our previous year 23-24, the value taken by government is 348. So for the simple language, if 100 rupees has been used for the purpose in 2001-2, then as per government index value, that 100 rupees value is now 348. So if you expended 20 lakh rupees in 2005, then how much it will be in 2023-24? So for that, index formula has been made, and it says 20 lakh divided by the index value of that year in which it has been purchased, that is 2005 index value, and multiplied by the current year index value, which will be 348. So what is the index value of 2005? We have the list of this complete index value, and the index value of 5 was 117. So that will be 20 divided by 117 multiplied by 348. That will now 59.48. That value will be 59.48. So now you can see, if we'll calculate capital gain now, which was earlier 100 minus 20. So if we calculate now capital gain, that will be 100 minus index cost of acquisition. Now this cost will be called index cost of acquisition, 59.48. So now you can see the capital gain will be reduced. Earlier capital gain was 80. Now the capital gain will be 40.52. So now we have to pay tax on this only 40 lakh with 20%, almost 8 lakh. So you can see earlier the tax was almost 16. It has reduced to almost half of the tax. So this provision has been made for the benefit of assessee. And exactly why it has been made? Because he was technically saying the correct thing. That exactly the capital gain should be calculated after the application of indexation concept. So that's how we find the indexation concept. So for the purpose of examination, you do not need to explain this. You just need to know the formula, which is this simple. I just explained you the whole story because I wanted to make you understand what is the meaning of indexation, how it was generated, how it was evolved, how it was originated. So whenever you apply, you should know that what I am doing, or also that why I am doing. So the formula is very simple. Whenever we say cost of acquisition, we need to convert it into index cost of acquisition. And the formula will be cost of acquisition divided by the index for the year, asset purchase index. That will be given in question. Do not worry, that will be given in question. And the current year index, 348. You should remember this only. The purchase year index will be given in question. You just need to remember two index for your examination. The first index, that is 2001 to 100, and your current year index, that is 23-24, that is 348. Just need to remember two index of these. Any other index which is going to be utilized in the question, that will be given in the question already. Okay. So moving on to the theoretical story. So whatever I've explained you, that has been written in this paragraph. So that is for your knowledge, that is for your benefit, that you will read it, you will understand what I was explained in the for the purpose of indexation. Fine. So now we are moving on to the provision of indexation. Under section 48, indexation will be done only on long-term capital asset. No indexation on short-term capital asset. The benefit of that indexation will be available only on long-term capital asset. So under section 48, for computation of long-term capital gain, the cost of acquisition and cost of improvement, you will index both the cost of acquisition as well as cost of improvement will be increased by applying the cost inflation index. Once the cost inflation index is applied to the cost of acquisition and improvement, it becomes index cost of acquisition and index cost of improvement. So for short-term capital asset, we only deduct cost of acquisition or cost of improvement. For long-term capital asset, we need to deduct index cost of acquisition, index cost of improvement. Here is the formula what we were discussing, that is cost of acquisition multiplied by the index for the year in which asset is transferred and divided by index for the first year in which asset was first held by assessee. That means purchase year index, or this is important, or financial year 1-2 index, that is 100, whichever is later. Why it has been said that purchase year index or financial year 1-2 index, whichever is later? There is a concept behind it. Index concept has been started from financial year 2001-02. Starting index was 100. Now there might be a problem. Suppose the question says Mr. A purchased a building in 2010 for rupees 10 lakh, sold for 70 lakh in 23-24. So in this scenario, we can solve it. What we will do? We will put on sale consideration 70 lakh and we will do index cost of acquisition. Index cost of acquisition, for which we have cost of acquisition 10 multiplied by 348. And for this divide, for the purpose of divide, we need to find the 2010 index, which will be given in question, and that is 2010-11 financial index is 167. So we can solve it by applying 167. So that will be easy. So if asset has been purchased, or acquired on or after 1/4/2001, then there is no problem. We will have our index and we can write that index and we can solve the value. But suppose if the question is this, Mr. B purchased a property in 1995 for rupees 10 lakh and sold this for 70 lakh in 23-24. Now the problem arises. The sale consideration 70 lakh. But now when we will apply the index cost of acquisition concept, we have the cost 10, we can multiply with 348. But we do not have index for year 1995. There is no index for year 1995. No index. Because indexation concept already discussed from 2001-2. So there is no index has been given from 1995. So for those cases, That means cases in which property has been acquired before 2001, 1st April 2001, we have to always take index 100 over here. That is 2001-02 index. Always. Any property which has been acquired before 2001, for that year, we do not have index. So we have to divide it by the 100. That is the formula was saying that you have to take the index either for the purchase year or 2001-2 index, whichever is later. So if we apply this in this case, so purchase year is 2010 or 2001-2. Later is 10. So we took the index of 10. In the second example, the purchase year 1995. So we do not have any index. So 1995 index or 1-2, whichever is later. So 1-2 will be the later, 100 will be taken always. So you can understand this concept like this. If the asset has been purchased on 2001, the purchase year index will come. No need to compare. If the property is purchased before 1/4/2001, always 100 index will come. Or always we can say 2001-2 index will be used for the purpose of division. So that was the intention of this formula. The first year in which asset was first held by SSC, so this will automatically will be applicable when asset has been purchased on or after 1/4/2001. And if it is before 1/4/2001, then always financial year 1-2 index has to be taken. We do not have any choices. This is for index cost of acquisition, but there is slight difference with index cost of improvement. Index cost of improvement says cost of improvement. Do not worry, I will solve a numerical after that. Cost of improvement you have to take multiplied with index for the transfer year. That means 348 always. And for the division purpose, we have to take the index for the year in which improvement took place. In the year improvement took place. So there is no concept of improvement took place or financial year 1-2, whichever is later earlier. No, that is applicable only for the index cost of acquisition. For the purpose of improvement, we always need to divide it with the index for the year in which improvement took place. There is no need to take 100. Whatever is the year of improvement, we have to take the index of that year. Do not worry. You might be thinking, what if improvement have been done before 1/4/2001? So if any improvement is before 1/4/2001, we have to ignore it, because we do not have index for that, so we cannot claim that improvement. Cost of improvement only be considered if it has been incurred on or after 1/4/2001. We have a note also for that. These are index value. You can see the first index was 100 and the last for examination is 348. Here is the provision for improvement. Cost of improvement incurred before 1/4/2001 will be ignored. Why we need to ignore? Because you cannot index it, because we do not have indexed value for the purpose of cost of improvement. For the purpose of cost of acquisition, we can take 100 if the property acquired before 1/4/2001. But this advantage has not been provided for cost of improvement. So for the purpose of cost of improvement, we can only consider those cost of improvement which has been done on or after 1/4/2001. First, cost of improvement done by SSC or previous owner, both are liable to deducted by SSC, provided expenditure has been done on or after 1/4/2001. I'll explain it with the help of an example. Just stay. Cost of improvement in the nature of capital expenditure will be considered only. and not any cost of improvement in the nature of revenue nature will be considered. So suppose you have a house. In that house, you have incurred 2 lakh rupees to construct a new room. You incurred 2 lakh rupees to construct a new room. So that is a capital expenditure. But if any expenditure has been made on repair work, whitewash, etc., that will be considered as revenue expenditure. So in that case, you cannot claim it as a cost of improvement. So till point number 2, let me explain you with the help of an example. So you will understand all the provision till now, what we have discussed under capital gain questions. Okay. Very simple question. And you will find that how easy is capital gain. Suppose question was says, Mr. Ram purchased a house for rupees 20 lakh on 1st July 1995. Cost of improvement on 1st October 1999, 1 lakh rupees. Cost of improvement 1 November 2000, 2 lakh. Cost of improvement 15th May 2010, 3 lakh. Sold this property for on 11th November 2023 for rupees 150 lakh. Brokerage at the time of sale 10%. So we need to solve this question, and for the purpose of capital gain or any income tax question solution, we have always write this, that is computation of, the heading should be always this, computation of what we are calculating, capital gain. So we will write capital gain. If it is PGBP, we will write PGBP. If it is salary, we will write salary. If it is total income, we will write total income. Computation of capital gain in the hands of, who is the assessee? In the hands of assessee. Who is the assessee? Assessee, that means Ram, for assessment year 24-25. This should be followed in every question of income tax. First of all, period of holding. In short form, we say POH, period of holding. That means to find out whether asset is a long term or short term. So the purchase year was 95, 1st July 95, and the sale year is 23. So till 95 till 23, it is more than 24 months. For immovable property, we have to check it's 24 months. So because it's more than 24 months, so we will write it long-term capital asset. You need not to calculate that 30 year, 5 months and 10 days. No. If it is more than 24 months, you can directly write it down long-term or short-term. Now the sale consideration. The sale consideration is in the question is 150. We have to deduct the expense on transfer. That is brokerage. Expense on sale 10%, that means 15. So my net sale consideration will be 135 lakh. Now we have to deduct the index cost of acquisition, index cost of improvement. So index cost of acquisition is 20 cost multiplied by 348, and because the asset has been purchased in 1995, we do not have index for that year. So what we will take? 100. Whatever will be the amount, we need to deduct it from here. Now index cost of improvement, and you can see those improvement which has been done before 1st April 2001 will be ignored. We cannot solve it. So we ignore them. We can only consider this cost of improvement, that is 3 lakh into 348 divided by index for the year 2010-11 financial year. So what is the index for the year 10-11? I guess 167 it was. Financial year 10-11 index, that was 167. So we will write index 167. That will be given in question. Do not worry. We need to deduct this. That will be my answer. Long-term capital gain or loss. If the loss is coming, that will be loss. So you can see in the single question, we actually explained almost all the provision we have discussed yet. Long-term, short-term, period of holding, indexation, cost, improvement, etc. Okay. So let me take the query, then we will go for a short break. And after, when we will come back from the break, there will be a short story, of course, for today. And then we will resume the other provision of capital gain. Let's see what are the queries. Vaishali Bindal is asking, unlisted security, those securities not listed in stock exchange, that is called unlisted security. What kind of question you are asking, Vaishali? Sir, if immobile property is sold by individual before 24 months, it is taxable under capital gain, of course. Who is asking? Soumya. Soumya Kane. It will be taxable under capital gain as a short-term capital asset. It won't be a long-term, but it will be a short-term capital asset. Okay, ignore. Sorry, I'll read it later. Okay, A Jyoti is saying good morning, sir. Good morning at 8:13. Very bad, very bad. Next is Manohar asking, index will be given in question. Manohar, do not worry. You just need to learn two index. First one was 100 and the last one is 348. Next is, if we purchased capital asset before 2000, then how we will find indexation value of asset? Dhruv, so I've explained how you will find the index value, because index will be taken 100 in all the cases when you purchase an asset before 1/4/2001. Capital gain easier than other hand. Everything is easy until we understood that. Sorry, everything was difficult until we understood that. So you might get the provision, might be understanding the provision, so you might be feeling it easy, or you might feeling it interesting. You might be feeling capital gain interesting. That's why you are feeling it easy. Okay. Neha Saxena asking, why 348? Government has decided that index. The current year index has been 348. That's why we are taking 348. Because we have to multiply with the transfer year index. Okay. Market linked debenture means those debenture having the characteristics, or is the return has been linked with market. So what is zero coupon bond? You might be asking, what is equity shares? What is preference share? What is market-led debenture? What is mutual fund? What is UTI? Kindly go to the Google and search about them. So if we are going to explain these kind of query, that will be really difficult. Okay. Mamata Yadav asking, sir, how house property will be treated in capital asset? Why not in house property? Mamata, what are you asking? If you are having a house property and if you let it out, if you are getting rental income, then it will be house property income. In capital gain, we are discussing if you sold it, if you sold that property, sold, transfer, then it will be capital gain. Then there will be no rental income. So house property is for rental income till you own the house. But once you transfer that house, then it will be capital gain provision, no house property. Understood? I have explained in house property that if you are having a building and you are having rental income, then it will fall under income from house property. Next is Rito Banerjee. Mr. Ritu Banerjee Sir, if in this question it was a short-term capital asset, then we need not to calculate the indexation. Correct. So if it would have been a short-term capital asset, then the purchase date cannot be 1995. It should be within 2 years from the date of sale. So the date of sale we took 2023. So it would have been before between 2021 and 23. And yes, if it is a short-term capital asset, indexation concept not applicable. Okay, Mamta is saying, okay, sir, thank you. You're welcome. So I guess we have discussed a lot of provision regarding the capital gain. So time for a short break. After the break, we will show and resume our capital gain provision. So Manishji, can we go for a short break? Welcome back, everyone. So I believe that you must have your tea, coffee, etc., and must have gained some energy to continue with our capital gain session. So we discussed today the provision of capital gain, the basic concept, the definition of capital asset, the definition of transfer, short-term capital asset, long-term capital asset, the indexation concept we just discussed. Okay. Let me take some query if there is any. Prashant is asking, sir, what will happen if house has been sold without any consideration? Does will create capital gain? But later on in a section 47, that is going to be exempted capital gain. Okay. Sir, when we are selling gifted property given by parents, then how much tax we will pay? Mr. Ajay Chauhan, that is section 47. We will discuss the provision of this numerical treatment that if we are having any property which has been received by us as a gift, etc., and if we are going to transfer it, then what kind of capital gain or how to calculate capital gain, that the provision we will discuss in section 47. Okay. So I guess all of you are back. And now there's a story time. So I've always told you that story will be in Hindi. So a very interesting, very short story for all of you. There was a village, एक गांव था, बड़ा अच्छा गांव था, very nice village. और वहां पर एक साधु रहते थे, a saint. और जब भी वो डांस करते थे, नाचते थे, तो उस गांव में बारिश हो जाती थी. तो सब लोग उन्हें बहुत मानते थे कि ये बहुत पावरफुल हैं और ये बहुत ही इनके पास पावर है. ये जब भी नाचते हैं साधु, बारिश हो जाती. सो एक दिन उस गांव में शहर से 3 लड़के आए घूमने के लिए, और उन्हें ये बात पता चली कि यहाँ पर एक साधु है जिसको सब ये कहते हैं कि ये बहुत पावरफुल है, बिकॉज ये जब भी नाचते हैं तो बारिश हो जाती है. तो लड़कों को लगा ये पॉसिबल कैसे है, देयर मस्ट बी सम ट्रिक, कुछ ऐसा है. तो उन्होंने नोटिस किया वो शहर, वो जो गांव था वो एक हिल एरिया पे था, एंड वहां बारिश हर 2-3 दिन में एक बार हो जाती थी. तो उनको समझ आया कि ये जो साधु है ये बेवकूफ बना रहा है सब लोगों को, और इसके पास कोई पावर नहीं, बिकॉज ये जगह ऐसी है और शायद जब बादल आते होंगे तब ये डांस करता होगा, उस वक्त बारिश होती होगी, तो सबको लगता है कि इसके पास पावर है. तो उन लड़कों ने सारे गांव को बुलाया और बोला कि हमारे पास भी वही सेम पावर है जो साधु के पास है, हम भी जब डांस करेंगे बारिश हो जाएगी. तो सब गांव वाले आ गए, साधु भी आया, एंड उन बच्चों ने डांस करना शुरू करा. लड़कों ने, क्योंकि बादल हो गए थे तो उन्हें पता था कि बारिश होने वाली है, सो दे स्टार्ट डांसिंग. तो 1 घंटा हुआ, डांस किया, बारिश नहीं हुई. 2 घंटे हुए, बारिश नहीं हुई. 3 घंटे डांस किया, बारिश नहीं हुई. और वो लड़के तीनों थक गए और बैठ गए. अब गांव वालों ने उनका मजाक उड़ाया. तो उन्होंने कहा अरे हमारे पास भी पावर नहीं है और इस साधु के पास भी नहीं. और उन लड़कों ने नोटिस कर लिया था कि बादल चले गए, उन्हें पता था अब बारिश नहीं होगी. उन्होंने कहा अच्छा अगर साधु के पास पावर है तो अब इसको बोलो कि ही शुड डांस एंड देयर शुड बी रेन. तो गांव वालों ने साधु से कहा, साधु ने कहा ओके, एंड देन ही स्टार्ट डांसिंग. देन दैट सेंट स्टार्ट डांसिंग. साधु ने डांस करना शुरू किया, नाचना शुरू किया. 1 घंटा हुआ, 2 घंटा हुआ, 3 घंटा हुआ, 4 घंटा हुआ, 5 आवर्स हुए, एंड बारिश हो गई. और सब गांव वाले खुश हो गए. गांव वालों ने कहा लड़कों का बहुत मजाक उड़ाया कि तुम लोग हमारे साधु को गलत बोल रहे थे, देखो ये सम एक्सक्लूसिव पावर, जब तुम लोग डांस कर रहे थे तब बारिश नहीं हुई, बट व्हेन ही डांस्ड इट वाज रेन. सब गांव वाले चले गए, लड़के उस साधु के पास गए, उसको सॉरी बोला कि हमें लगा था कि आप झूठे हैं और आपके पास कोई पावर नहीं है, बट हमें लगता है आपके पास पावर है, बट क्या पावर है, कैसे ऐसा पॉसिबल है कि बारिश आपने करा दी, कैसे. तो साधु ने कहा कि जब मैं नाचता हूँ तो 2 बातें ध्यान में रखता हूँ, लिसन केयरफुली, कि जब मैं नाचता हूं तो मैं 2 बातें ध्यान में रखता हूं. पहला, कि जब मैं नाचूंगा तो बारिश को होना ही पड़ेगा, बारिश होगी ही होगी. मैं इस बात का कॉन्फिडेंस रखता हूं कि जब मैं नाचूंगा बारिश को होना ही पड़ेगा. और दूसरी बात, कि मैं तब तक नाचूंगा जब तक बारिश नहीं होगी. मैं तब तक नाचता रहूंगा जब तक बारिश नहीं हो जाती. सो आई विल कंटिन्यू डांस वेदर इट टेक 6 hours, 10 hours, 10 hours, 11 hours, 12 hours, does not matter. I will not stop until it rains. So it's just like your study. If you decided that you have to be a CA, you are not going to leave this course, then you will be a chartered accountant. So until this course does not clear, जब तक आप pass नहीं होते, do not leave this course. Put your hard work. Listen carefully what that sadhu said. It says कि जब मैं नाचता हूं तो ये मान लेता हूं कि बारिश को होना ही पड़ेगा. So whenever you study, you should believe that yes, मैं पास हो ही जाऊंगा पक्का. और जब तक पास नहीं होगा, तब तक मैं पढ़ाई बंद नहीं करूंगा. I will not leave this course. And if these two things you are going to decide it, and I'll assure you, you will be a C. So that is called decide, commit, and succeed. There was a thought for the day. I guess we discussed in PGBP session, that was decide. So you should decide that you are going to complete this course, and now commit yourself. Like the sadhu was dancing continuously. It doesn't matter how long it will take. He was dancing. The same way you have to commit to study. You have to sacrifice things. You have to study for a certain time, and you have to channelize your study in a specific way, and then of course success will be yours. So that was a story for the day, and I personally liked this story very much, very, very much. It was so good. So moving on to the provisions, and I believe you all must have liked it. It's a very beautiful and short story. So now moving on to note number 3. So we have completed the cost of improvement to clarification, first one and second one. Now moving on to third one. This is not for cost of improvement. These are general clarifications. Third point says indexation not apply in case of debenture and bond. So we discussed that indexation will apply on all long-term capital asset, but there are certain exception. Point number 3, 4, and 5. These are the exception in which indexation will not apply even if it is a long-term capital asset. So indexation not applies in case of debenture and bonds. So if there is any debenture and bonds is given in question, even if it's long term, we are not going to apply indexation provision on that, except capital index bond. But we will index if it is a capital index bond issued by government, or it's a sovereign gold bonds issued by the RBI under the gold bond scheme. So only these two bonds, capital index bond and these gold bonds issued by RBI, need to indexed if it is long term. Any other bonds and debenture, even if it's long term, need not to be indexed. Okay. Next, in case of units of a specified mutual fund and market linked debentures, that was a specific amendment we have discussed, that these will always be treated as short term. So there will be no indexation on specified mutual funds and market linked debentures. There will be no indexation, and the capital gain will always be short term capital gain. The next is in case of depreciable asset. The section 50 will explain the provision in detail, but for the time being, if there is a depreciable asset, again there will be no indexation on depreciable asset because the gain will always be short term capital gain. There was some clarification. Now one of the most important topic of capital gain is cost of acquisition. In the capital gain question, sales consideration will be given in question. Okay. And we know how to index the cost of acquisition with the formula. We already know that. But what will be the cost of acquisition? That is a technical part. The finding of cost of acquisition is not that simple as we just think that it is a purchase price. In different cases, in different nature of asset, the cost of acquisition can be different. So what will be the cost of acquisition in different cases of asset? That is going to be explained by section 49. In this section, we will see what will be the cost of acquisition in different cases. Cost of acquisition, I am going to explain that with the help of a chart. I will upload that chart also on portal, but before that, let me make that chart for you so you will understand what kind of cost of acquisition will be taken in case of different scenario of different kind of assets. So that is cost of acquisition for capital assets. And that is non-depreciable. If that is a depreciable asset, then section 50 will tell about the cost of acquisition, because in case of depreciable asset, we took WDV, not the cost of the asset. So in case of cost of acquisition, first case is, suppose case number A, that is regarding goodwill of business, copyright, patent, trademark, etc. That means intangible assets. So if we are transferring any goodwill of business or copyright or patent or trademark, etc., in that case, what will be the cost of acquisition? It says there will be two situations. If it is self-generated, that we did not purchase that goodwill from anyone. It is my personal goodwill. It is my business goodwill. I started the business and now it has been made certain value, that is a goodwill of my business. So if I have transferred my goodwill of business to some other person, so that is self-generated because I did not purchase it from anyone else. If I am having a copyright of my any article or book, etc., if I have patent of any of my invention, if I have trademark of any of my goods, in that case, that is, if it is self-generated, the cost will be nil because it did not expense anything for it. And if it is purchased from someone, then purchase price will be the cost of acquisition. Very simple provision. Even the same provision is applicable if these assets has been purchased on or before 2001. In some cases, if asset has been purchased before 1/4/2001, the cost provision is different. And if it is after 1/4/2001, the cost provisions are different. But for case A, goodwill of business, copyright, patent, trademark, etc., the provisions are same, whether it's purchased before 1/4/2001 or after 1/4/2000. For example, suppose there is Mr. A who started a business, suppose a restaurant. Fine. After 5 years, he is selling this business to Mr. B and charging for goodwill. For this brand name, he is charging for goodwill, suppose 5 lakh rupees from Mr. B. So now the goodwill consideration for Mr. A will be 5 lakh. Sale consideration for goodwill is 5 lakh. But now, does Mr. A purchase this goodwill from someone or it's self-generated? Is this business started by Mr. A or it has been purchased by Mr. A from someone else? So in this scenario, it has been purchased, not purchased, it has been self-generated. So cost of acquisition of this goodwill will be 0. So full value will be capital gain. And it because 5 years, so it will be a long-term capital gain. Now suppose Mr. B purchased this goodwill for 5 lakh and after 3 years or after 4 years, Mr. B sold this business to Mr. C. And for goodwill, he charged 7 lakh rupees. Now, for the purpose of Mr. B, the sale price of goodwill is 7 And goodwill for Mr. B is not self-generated because he purchased this goodwill from Mr. A for rupees 5 lakh. So the cost for the purpose of Mr. B will be 5 lakh in this case. So Mr. A, it was self-generated cost, that will be nil. But for Mr. B point of view, if we solve this question, then the cost will be as per purchased case. That will be purchase price, that means 5 lakh. So in the question, it will be given whether it's self-generated or it has been purchased. So if it has been self-generated, then cost will always be zero, always nil. And if it is purchased from someone, then it will be purchase price. Understood? It's very simple. That will be given in question. And remember this, whether it's purchased before 1/4/2001 or after, it will remain the provision same. Now the case B. Case B is for goodwill of profession. Like doctor, like a chartered accountant, an advocate, etc. So goodwill of profession can be of two types: personal or commercial. Personal, like I am a chartered accountant and I have a degree of chartered accountant. So if I transfer my degree to someone else, suppose Mr. B, who is trying to be a chartered accountant but not able to complete this course. So I said, okay, fine, do one thing, take my certificate of being a chartered accountant, you will be a CA from tomorrow. So I am transferring my degree to you. Or a doctor is trying to transfer his degree to Mr. B. If from tomorrow you will be considered as a doctor. So that is practically not possible. That is impossible. Personal goodwill of profession cannot be transferred. Personal goodwill of profession cannot be transferred. So there is no capital gain ever. So there is non-applicability. It's not possible. You cannot transfer your personal goodwill to anyone. Like in 12th class examination, you got 90% percentage. You have a mark sheet of 90%. And your friend scored only 40% marks. So if you will give your mark sheet to your friend and you will take his mark sheet to yourself, so is his marks will be considered now 90% and your will be 40%? No, it's practically not possible. So personal goodwill of profession cannot be transferred. So there is no question of capital gain ever arise, because if you cannot transfer, it cannot be capital gain, because for the purpose of capital gain, there must be a capital asset and there must be transfer. But for commercial purpose, there will be goodwill of profession of commercial that can be transferred. Again, the same provision as per goodwill of business. Copy paste. If it is self-generated, if it is purchased. Self-generated, nil. Purchase, purchase price. Before 1401 or after does not matter, same provision will be applicable. How it's possible? Suppose there is a chartered accountant firm A, B, C and company, in which there are three partners A, B and C exist. Clear? Now ABC is going for a job, but there are three new CA D, E, F who wants to carry on this partnership firm. So ABC is leaving this firm and going for a job, but DEF want to continue this partnership firm. But because they are new chartered accountant and this firm has 20-year experience, so ABC and company partners can ask them that you have to pay some amount for goodwill of our firm, because now if you will become the partner of this firm, then you will have the practicing experience of 20-year firm can be associated with you. So for this, we need to ask you to pay 5 lakh rupees as goodwill of profession. So in that case, there will be goodwill of profession, and because it is self-generated, so the cost will be nil. And if DEF going to transfer that into someone else, then in that case, they can charge cost 5 lakh rupees, same as this case. So case A was also for intangible asset, and intangible asset including business goodwill, and all these are kind of a license. So for this case, the concept is same, self-generated nil, purchase price. In case of goodwill of profession, same concept, personal nature goodwill cannot be transferred, commercial nature, same cost of acquisition provisions applicable. Now case C, because we do not have the space left over here, so need to use the extra part. Now case number C, this is for now this is for shares. Do not worry, I'll already made a detailed diagram, the chart presentation, what I'm explaining to you. I've already made a chart also for that. I will upload that also today. So in case of shares, there are 3 kinds of shares for the purpose of cost of acquisition. One is ordinary shares, normal shares that means. Then we have bonus shares. Now, please don't ask me what is bonus shares, because it's a very common term. And if you do not know, kindly Google it so you will understand what is bonus shares. In the same way, right shares. So ordinary shares, that means those shares issued by the company, or we are going to purchase it from the stock exchange. So either we are going to purchase it from the company in case of IPO, etc., or we are going to purchase from the secondary market, that is my stock exchange. In both cases, the provision says if it is purchased before 1/4/2001, I've told you, in some cases, before 1/4/2001, different cost acquisition, and after 1/4/2001, different provision. In case of A or B, the concept was same. For goodwill of business and profession, whether it's before or after, concept is same. But for ordinary share, there's a difference. If ordinary shares has been purchased, whether from a company or stock exchange, and if it is purchased before 1/4/2001, then cost of acquisition will be FMV on 1/4/2001 or purchase price, whichever is higher. Simple. And if it is on or after 1/4/2001, then the cost of acquisition will be simple, purchase price. In case of bonus share, that means the shares we have received without any consideration, bonus. In case of bonus shares also, if we have received it before 1/4/2001, the cost of acquisition will be FMV on 1/4/2001. And if it is on or after 1/4/2001, then cost of acquisition will always be nil. Clear? Now the right shares. In case of right shares, there's a slight difference between ordinary and bonus shares. In case of right shares, what exactly the company does, company says, suppose there's an old shareholder, or we can say that existing shareholder. Old shareholder in the company, Mr. Ram. So company issue right shares. Suppose 1,000 right shares. Right shares means first company will offer the share to the existing shareholder. And if they do not want to purchase, then company offer these shares to into the market, that is means to the new shareholder. So initially company will offer to the existing shareholder that you can buy our company's right shares, and that will be available to the existing shareholder at concessional price. Suppose FMV of these shares is 100 rupees and right share value, right price, that is for only Mr. Ram is 90 rupees. So company says, if you want to purchase, we can sell these shares to you at 90 rupees each share. And if you do not want to purchase, then we will issue these shares into the market at the value of 100 rupees per share. So technically in right share, the existing shareholder having a right to purchase before the company offer these share to the new shareholder. Suppose in our example, Mr. Ram having right to purchase 100 share of the company at the value of 90 rupees, which is offered into the market for 100 rupees. So now the buyer in case of right share will be either the old shareholder, or if he say no, then company can issue these share to the new shareholder. Clear? Now, old shareholder can take two decisions. Either he can purchase these shares, So if he decided to purchase these shares, then there will be two conditions like this, ordinary shares, whether it will be before 1/4/2001, then cost of acquisition will be FMV on 1/4/01 or purchase price, whichever is higher. The same provision we are repeating. There is no new provision. If he purchased the share on or after 1/4/01, then the purchase price will be the cost of acquisition, which will be 90 rupees in our example, not 100, because the market value was 100. But company will offer him at less than the market price, that is 90. So if it is before that, then purchase price 90 or FMV, whichever is higher. And if it is after that, then purchase price will be your cost of acquisition. Old shareholder is having one more right, that he can renounce. I believe that you must have read these provisions also. Renounce. Renounce means waive. So he can renounce his right to purchase. Renounce means waiver. So suppose company offer Mr. Ram to purchase these shares, that if you want, you can purchase these share at rupees 90. So now Mr. Ram has two options. Either he will go to purchase the share, or he can renounce his right to any other new shareholder. Suppose the new shareholder, one of the new shareholder is Shyam. Shyam want to purchase it. So Mr. Shyam contact to Mr. Ram that if you are not willing to purchase these shares, can you transfer your right in my favor? Can you write to the company that my share should be transferred to Mr. Shyam? So Mr. Ram having two rights. Either he is going to purchase the share, or he is not going to purchase the share, but he can transfer the right to purchase the share in favor of any new shareholder. And suppose for the purchase of right, he will not do it for free. Mr. Ram charges 2 rupees per share to renounce the right. So in that case, the sale consideration to renounce the right will be 2000, because 2 rupees per share, and we have 1000 shares. So suppose Mr. Ram renounced the right into the name of Mr. Shyam, and Mr. Shyam paid 2 rupees per share for this. So the sale consideration for this will be 2000. And what will be the cost of acquisition for Mr. Ram? That will be nil, because he did not incur any expenditure. He just need to write to the company that kindly issue my share to Mr. Shyam instead of me. So for that, he is receiving 2000 rupees as an income. And for the purpose of cost, there will be no cost in the hands of Mr. Ram. Suppose, clear? So if he go for a purchase, then that will be the cost in the hands of Mr. Ram in different situations. But if he renounces right, then always in the case of renounce of right, there will be cost always be nil. There cannot be any cost. Now, what will be the situation in the hands of new shareholder? I'm not going to renounce this right. You go to the company and directly buy the shares. I'm not interested of renouncing the right. I am not buying the share. Even I don't want to renounce the right. You go to the company and buy it. So if new share went to the company and buy that shares from the company, in that case, again, there will be two same situation, repetitive provision. The same is repetitive over here, the same is repeating over here, the same is repeating over here. If it is purchased before 1401, then FMV on 1401 or purchase price, whichever is higher. Purchase price means market value, which is 100 in our question. If it is after 1401, on or after, then it will be purchase price always. That is 100 rupees in our example, because he has to buy from the company. So company will sell those share to Mr. Shyam at market price. If Mr. Shyam in the second says purchase the right from the Mr. Ram, first purchase right from old shareholder, and then went to the company to purchase the share. So in this situation, what will be the cost in the hands of Mr. Shyam? In this situation, cost will be again repetitive provision. If it is before 14-2001, then FMV on 1401 or right value plus purchase price, whichever is higher. Right value matlab 2 rupees plus 90 rupees, not 100. That means 92 rupees in our example. So if you will get the right from the old shareholder, then company will offer you that share for the same value it was about to offer to the existing shareholder. So the purchase price will be right value plus 90 rupees, which he is going to pay to the company, whichever is higher. If it is on or after 1401, then only purchase price, and that purchase price will be 2 plus 90 in our example, that is 92 rupees. So you can see the same provision will repeat it 4 times. So you always remember that in case of shares, whether it's ordinary, bonus or right shares, when you need to find the cost, and if it is before 14-2001, then always FMV on 1401 or the purchase price, whichever higher will be your cost. Because in case of bonus share, there is purchase price always be 0. So we took FMV as higher value always. And after 1401, it's always purchase price. So always bonus share, purchase price 0. So in case of bonus share, we take 0 after on or after 1401. So that was regarding bonus share or shares value, provision of cost. Now the D case, last case, other assets. Like we did not discuss the provision regarding jewelry, regarding building, land, etc. They all will fall under other category. For other cases, there is again 2 conditions, same repetitive provision for all other assets. If it is before 14-2001, then FMV on 1401 or purchase price, whichever is higher. On or after 1401, the purchase price will be your cost of acquisition. You might see that in case of shares, I have marked a star only for share cases, because for share cases we have a new provision to calculate the cost, except these provision to calculate cost of acquisition if shares purchased before 1st February 2018. That will be discussed later. Fine. So we just discussed the normal provision regarding the cost of acquisition of shares right now, but there is a specific provision regarding shares, bonus share, etc. If you purchased that bonus share before 1st February 2018 and STT has been paid, etc. So that will be discussed later. For the normal provision, excuse me, normal provision, we have discussed how to calculate the cost of acquisition. You do not need to make this diagram because I will upload the diagram made by me, including all these provision over here, including even this special provisions also. You just need to understand the provision. What I was saying, it says that in case of intangible asset, the provision will remain same whether it's before 1421 or after. It is self-generate nil purchase price, self-generate nil purchase price. In case of shares, we have discussed, if it is ordinary shares before 1401, you can see this is not difficult. You might think that the chart is so huge, but it's not huge. You can see there are repetitive provision regarding this. 1, 2, 3, 4, and almost 5, and exactly the same provision for other case, almost 6 times the same provision applicable. So it's not difficult at all. It's just repetitive provision when asset has been purchased before 1/4/2001. Same provision from shares, case number C and D. Same provision if asset has been purchased before 1/4/2001. You have to take the cost as FMV on 1401 or purchase price, whichever is higher. And if it is after 1401, in all cases, the cost will be purchase price. So in case of goodwill of business, there is some clarification regarding these cost of acquisition provision. Goodwill of a business in relation to a capital asset being goodwill of a business or a right to manufacture, produce or process any article or thing, or right to carry on any business profession. The cost of improvement shall be taken to be nil. It will always remain nil in case of intangible assets. Land and building, non-depreciable cases are 2 separate assets. Land and buildings are technically 2 separate assets for the purpose of capital gain. If land acquired before 2 years and building constructed within 2 years, then we have to calculate separate capital gain for both assets separately. In this case, land will be long-term capital gain and building will be short-term capital gain. So if in any question, land and building, sale consideration and cost has been given separately, and the year of purchase, etc. given separately, then you have to calculate the gain also separately. If any asset non-depreciable acquired on loan, then interest of such loan till the repayment will become cost of acquisition and will be indexed if long-term capital asset. So if any machine building has been taken on loan, then interest amount will be treated as cost of improvement and it will be deducted till the amount of repayment of loan, and index will be done every year. But if that interest has been claimed under income from house property as current year interest or PPI, or under any deduction which will be discussed under deduction chapter under section 80 EE or EEA, then it cannot be used as cost of improvement. The fourth point explained this. The interest allowed as deduction under section 24B, that means income from house property. So either you can claim interest as cost of improvement under capital gain, or if you have claimed that interest under house property, then you cannot claim it under over here. While computing income from house property, and interest allowed as deduction under section 80EE or EE of chapter 6A, that is regarding deduction, that will be discussed later, would not be included in the cost of acquisition or cost of improvement while computing the capital gain. Because if you have claimed that interest under any other head, then you cannot reclaim it or double claim it under capital gain head. However, in a case of capital asset being goodwill of a business or profession in respect of which depreciation under section 32(1) has been obtained by the assessee, in case of goodwill of profession, if any depreciation has been claimed, then for the purpose of cost of acquisition, the value of goodwill will be taken as cost minus depreciation up to previous year 2019-20. Any other capital asset, the D case, where the capital asset becomes the property of the assessee before 1401. Cost of acquisition means the cost of acquisition of the asset to the assessee or the FMV on 1401, whichever is the higher. So a house property was purchased by Mr. A on 1192 for 30,000. And the FMV of the same was 1,40,000. So cost will be higher, that will 1,40,000. But here is an important provision over here. However, in case of capital asset being land and building or both, only for land and building or both, the FMV of such asset on 1401 shall not exceed the stamp duty value wherever available. So if the FMV is 1 lakh and stamp duty value is 80,000, then that cannot exceed 80,000. Then in that situation, cost should be 80,000 only. So generally we take FMV or purchase price, whichever is higher. But in case of land and building, the FMV on 1401 cannot exceed the stamp duty value. Here is the example. In the above example, if the stamp duty value of the property was 120 as on 1/4/2001, FMV was 140, but the stamp duty value was 120, then cost of acquisition will be 1,20,000 only. So stamp duty value will be the cost of acquisition even if FMV exceed the stamp duty value. So whatever we discussed in the chart or diagram, here is the table has been framed. Goodwill of business nil, self-generate, previous owner, purchase price. Everything has been described over here. You can read the provision, you can go through these provision, but it has been explained in the diagram already what we discussed just before this table. But for the right provision theoretical, you can read these provision. If there is any confusion, I am going to explain it. But you can see in this case of bonus share, this is the special provision. What I said we will discuss later, this is special provision that we are not going to discuss even now, we will discuss it later. So for the purpose of bonus share, we discussed if it is before 1401, then FMV, after this is nil. This is special provision that is 1st February 2018. That you should not ask me right now. I will explain this provision later in detail. Again, for shares also, if it is acquired before 1st February 2018, the provisions are special provision. We will discuss it later. Any other asset, we have discussed it, FMV or 1/4/2001 or purchase price, whichever is higher. But in case of building, it cannot exceed the stamp duty value. We just saw the example above. Where the cost of the property cannot be ascertained, that provision will also come later. So before section 47, we have completed till cost of acquisition of a capital asset. This is section 47. And I have told you when we were discussing the transfer definition that gift is technically a transfer. But because in that case of gift, will or donation, there will be loss. So income tax has restricted it. So there will not be any loss. That will be exempted capital gain. So section 47 explains the exempted capital gain, And in that case, you can see point number 2 talks about the will, gift, or irrevocable trust. The section 47 says cases in which transfer is not regarded as transfer. That means there is a transfer as per the definition of 247. But specifically, section 47 says yes, there is a capital asset, yes, there is a transfer, but we will not treat that transfer as transfer. So because we will not treat that transfer as transfer, so it will not be treated as a capital gain cases. So we have almost 15 cases, 15, in which there is capital asset, there is transfer. But income tax restricted it. We say, yes, it's transfer, but we will not assume it as a transfer. So there will be no capital gain in these 15 cases. And most of the cases, the reason is same, because there is loss always. So income tax, to restrict the loss to be set off from the gain, exempted these kind of transfer, which has been explained in these 15 points under section 47. What are these 15 points? That we will discuss later. Before that, let me take the queries. Prabir Datta, why RBI gold bond is exempted? Prabir, we cannot ask why. You can read the provision. Whenever there is a law, we have to follow it. We cannot ask the question why. Not even in examination, the question will be there that why the tax rate is 20%. Why this is happening? Why the agriculture income is not taxable? So we cannot ask why. Because it's a government notification that it has to be exempted. It should not be considered as a capital asset. There will be no capital gain. We have to follow it. We cannot ask the question why. Next is Arindra Sharma is asking, in case of shares, indexation apply for long term? Yes, in case of shares, there will be indexation applicability. But if the share has been purchased before 1st February 2018, that is special case of scenario. In that case, there will be no indexation. But for the time being, you should forget about the special case. We will understand the special case when the provision will come. So for time being, till now, you can say yes, indexation will be done on shares also. Indexation will not be on bonds and debenture except capital index bonds and the other gold bond issued by the government. Next is now asking, sir, in long term. Thank you so much. We have such great personality teacher like you. You are a fabulous teacher. Thank you, Shukriya. So the question was, in case of destruction or destroy of asset, any sum received as compensation, does it fall under short term or long term? It will depend on the asset which has been destroyed. If the asset has been destroyed, suppose the asset is a building. So for building, the time duration is 24 months. So building has been destroyed after 24 months, then it will be a long term. And if it is less than 24 months, then it will be a short term. So it will depend upon the period of holding of that asset which has been destroyed. Next, Rahul Sharma is saying, sir, एक बार केस भी रिपीट कर दीजिए एक बार. केस ऑफ राहुल शर्मा, कौन सा वाला केस? एक बार केस भी रिपीट कर दीजिए प्लीज. मुझे बताओ कौन सा केस रिपीट करना है, कौन सा वाला. ओके. Next is Srinivasan. Sir, bonus share are issued at free of cost. Then how we can find FMV before 2001? That will be given in question. Bonus is issued free of cost to you, but the market value will be there. Suppose you have purchased shares of Reliance company, and the company issue the bonus shares to you, that is free of cost. But the bonus share value, the Reliance share value will be the stock exchange. Company is not charging from you. That does not mean we do not have a FMV. Suppose you got a free car in any scheme. You won a car under a free scheme. So you are not going to pay anything for the car, but we do not have the FMV of that car? Of course we do have. So we do have the FMV of shares, whether received before 2001 or after. But company is not charging, that's why it's bonus share for you. But we all have the FMV of all shares, and that will be given in question. Next is Mrs. Suman Goyal, sir, in gold bond interest is being paid. So how can there be indexing benefit? Because the rate of gold will be increased. So at the time of redemption, there will be higher values going to be paid as per the rate of that gold. So there is the benefit of indexation, which is given by government to you. And it's a favorable thing to the assessee. So you will not question if government is giving something benefit to you. So we should not question it. We should accept. If somebody is giving us any benefit, you should accept it. Swati is asking, sir, for shares before 1401, is FMV or purchase price, whichever is higher, correct? And if after 1401, then purchase price, whatever it is, this correct or not? This is correct, absolutely correct. Even if after 1401, the purchase price has been given, suppose 1 lakh. An examiner may give FMV also to confuse you. 1,20,000, even after 14,2001. Then ignore the FMV. We just need to take the purchase price if any asset has been purchased on or after 1401. Next is Mamta Yadav, sir, tax rate for LTCG is 15 and 20. Sir, how we get to know कौन सा रेट लगना है? ममता जी, अभी टैक्स रेट लगाने का प्रोविजन असाइनमेंट नंबर 2 में आएगा. आई हैव टोल्ड यू कि जो भी कैपिटल गेन होते हैं किस पर कौन सी रेट लगेगी. 15 भी है, 10 भी है, 20 भी है, स्लैब रेट भी है. कौन सी किस पर लगेगी वो जब असाइनमेंट नंबर 2 में आप लोगों को पढ़ाऊंगा. आई विल टीच यू. सो जस्ट डू नॉट वरी, don't go fast, just stay with me. Whatever I'm teaching now, just try to understand that provision. Everything will be covered. Just relax. Just okay. Next is Ritu Banerjee. Sir, the cost of acquisition of depreciable asset is the WDV value and no indexation is applied. Do not worry. As I told you to Mamta, do not run. In the case of depreciable asset, what is going to be the cost? How we are going to calculate the capital gain, etc. That is going to be discussed. Just wait. Section 50 will explain about it. Next is Rahul Asar, in the chart case B related to professional service. I've explained you the chart B explained the professional services case that suppose there is a advocate firms, ABC are advocates, they are running a partnership firm. Who was asking Rahul, okay, in Hindi. So एक एडवोकेट्स की फर्म है जिसमें 4 पार्टनर है मान लीजिए और बहुत पुरानी फर्म है. अब उस 4 में से कोई नया पार्टनर उसमें एंटर होना चाहता है, ऐसे भी समझ सकते हैं. उस नए पार्टनर को एंटर करने के लिए हम कहते हैं आपको गुडविल के 2 लाख रुपए देने पड़ेंगे बिकॉज हमारी फर्म बहुत पुरानी है और आप नए आए. तो इन दैट केस पार्टनरशिप फर्म को 2 लाख रुपए मिलेंगे गुडविल के लिए. दैट इज सेल कंसिडरेशन फॉर पार्टनरशिप फर्म. एंड उसके बदले में हम क्या दे रहे हैं? कुछ नहीं. हमारी गुडविल कैसी थी? सेल्फ जनरेट. तो कॉस्ट क्या होगी उसमें? निल. ओके. नेक्स्ट इज Anirudh Jadhav. Sir, we have to learn all the formula like salary, house property, PGVP. Yes, of course we have to learn, and you should make the short notes. And do not worry, I will give the chart of whole capital gain topic, each and every provision also. So for the purpose of revision, that will going to help you a lot. So I hope there is no more query left, and I have discussed all the queries. So please revise twice. That's my advice to make you wise. And please go through the provisions of capital gain. Next class will be on, I guess, 12th. So all classes are on Tuesday and Thursday. So please revise the provision of capital gain and whatever PGP query was there, illustration number 9, etc. I will discuss in the next class. You can ask me the PGP problem in next class. We will discuss that. Okay. So have a very good day. Please stay safe and please study hard. So Manishji, can we close the session?